Okay, this is Vance. I'm back here again. This is the 7th. I got back in on this trade. I'm saying that, as you saw, my stop got hit here. Price moved up, pulled back again. And so this is another, like a second entry long, but more importantly, I think this is going to be the second leg of a measured move. So if you look at it from, this is my first leg up, first pullback fails, the second pullback. I think I'm going to go from here, and I still think it's valid, this top. So I got back in. My stop is below this more recent price action. I didn't limit in down below here. I mean, I guess I could have done that, but I feel a little more comfortable with this one right here. So I mean, wasn't sure. Like this is a strong bar right here. You have this. This is when it closed down here, but then this. I took my trade up at this area where it turned around more so, but you can see this is pretty strong. I mean, price went down first time, second time. I mean, to buy down here was a little bit more risky, let's say, more risk than I wanted to like undertake, because you see that there is this. It is rejection, no question about that. It seems a rejection right here, so that's why I took this trade. I wasn't confident in that. I mean, you could take your stop and come back down and take it out really easily. It could have retested this area, but now I think I could see this turnaround after this exhaustion. I put these lines in here to show the first leg down, second leg down. This is the bottom of this move here, and so I think this is there's really developing support down here. That's my thought, and that's why I think this is reasonable. So that's why I'm in. Again, getting to these tops. My target is right near these tops, a little bit above this one. If it breaks and holds, then as I said, I still think that we'll get to this area right here with my runner. Anyway, that's what I see, and so I'm going to let it go. Okay, had a rip up there, stop at break even +1, and go from there. Kind of punched up there real fast, so break even +1. You know, as I said, is there hesitation here? Will be pulled back. If it can stay above this area, I'll just kind of show this area here. Price can come up here and hold in this area above this line here. Then we get a good chance of going up to, I think. But it has to do that. And we'll just wait a little longer. Yeah, you can see that there's this hesitation right above this area. We had this move up, and let's say this zone, let's say, it's just, it's got to hold, it's got to move up and hold here, and they're going to see it turn around. So it's like, buyers are absorbing the contracts that are offered for sale here. But right now it's really in capitulation mode. I mean, there's buyers are matching sellers, and that's why price isn't moving. If buyers can overwhelm the sellers, then price will go higher. And I mean, they'll start buying contracts up. Then it always stands to reason. Again, anything above this area, this is where maybe the safety stops existed for maybe this move down or this move down to here, and buyers drove price, picked up the contracts up to here. That's why price has risen from this area to this area, and now we have some more contracts offered right here. That's why it's at these prices, and so they need to be absorbed. The reason that prices moved up here is that there are a few contracts being offered for sale, and buyers still had an appetite for these buys up to this point. But now you have more contracts being offered at these prices, and whether or not buyers can overwhelm and take control of the market to take prices higher. I'm almost going to come back down. See, there's too many contracts here. There's too much resistance here, and I'll give them my stop. Now, if my stop was down here, that would be better, but I've got it at break even +1. So this might come back and take me out. Not to say that this move isn't going to occur. It's just that at this juncture, maybe it's just too many buyers, too many contracts being offered for sale, not enough buyers coming into the market. There you go. So it didn't transpire that way. It didn't hold above that market, or my stop was just not low enough. So I'll leave this here, and if price comes down to here, you can see that my original stop would probably have been held. So if I left my stop at break down to this area when I put on this trade, we'll see if it goes up any higher. It's part of your review at the end of the day. Was my stop in the right place? You know, as far as should I have moved it to break even plus one? Something I think about all the time. You know, like there's two schools of thought of that. Don't move your stop if you put your stop on at that level. You don't take it off, regardless of what contracts you have. Well, I don't feel comfortable with that. I like to move my stop to break even plus one. That's what Mac does. That's what I like doing. But there are individuals that don't. They because you have to make the adjustment for your risk-reward ratio. So the reason being is that if you have 3 contracts on, 15 tick stop, $450 at risk. If you take your first 2 contracts off at 15 ticks, that's only $300. And if you move your stop to break even plus one, it comes back and takes you out, then anytime you put on your trade, when you put on your original trade, and that would be less than a 1-to-1 risk-reward ratio. Don't forget about commissions for the time being. However, my argument against that is that trades are dynamic, and from moment to moment, the risk-reward ratio will change depending on the marketplace. So once I get my first 2 contracts off, I feel comfortable moving at break-even plus one, because now that's the new dynamic. That's the new line in the sand, so to speak. So because I've got the 15 ticks ahead, if it comes back, now I still have a 15 tick stop. Well, 15 tick stop minus one because it's break even plus one. So let's say a 14 tick stop. My target is good. My runner target is always going to be larger than that. So at that juncture, that's where the new risk reward ratio is. And so if you want to really kind of divide it out, take into consideration, so the original trade was 1-to-1. The first 2 contracts were hit, so that I do have that profit, and then moving it to break even plus one. It's a 1-to-1. It'll be more than a 1-to-1 ratio if it gets to my target and not get to my target. So then you have to reevaluate the amount of risk-reward ratio on the one runner. Thanks for watching. If you have any other questions, please let me know. Bye for now.